Silver just crashed 36%. If you're holding right now, you're about to make a catastrophic mistake. I'm breaking down the 3 moves you must make before February 15th. Let's go. January 30th. Silver dropped from $121 to $74 in one session. Worst crash in 40 years. Here's what nobody's telling you. Major institutions like JP Morgan and Goldman Sachs didn't just get lucky. They saw this coming and positioned themselves weeks in advance. While retail investors were buying into the hype about silver shortages on social media, the smart money was quietly exiting at $110 per ounce and opening massive short positions. The question isn't whether silver crashed. The real question is, what happens next? And what should you do right now? Smash that like button, drop a comment with your current silver position, and subscribe, because what I'm about to share could be the difference between recovering your losses and making this situation 10 times worse. Kevin Walsh was nominated Fed chairman. He's an inflation hawk. Market panicked about tighter policy, but silver had already pumped 200%. It was overbought. This was going to pop regardless. Here's where it gets interesting. Follow the institutional money. Data shows that on the day of the crash, global silver ETFs saw net outflows of $2.87 billion. 90% of that was retail investors panic selling at a loss, but institutions had already reduced their positions when silver hit $110. They saw the top coming. This is what happens when speculation reaches fever pitch. When ordinary people are taking out 50 times leverage on silver trades. When your neighbor who's never invested is suddenly asking you about silver bars. That's your signal. The market is overheated. February 15th is critical. What happens on that date could determine if you protect your position or lose everything. Here are the 3 moves. Move 1. Calculate your liquidation price right now. If you're leveraged and silver drops another 10%, are you wiped out? If yes, reduce position immediately. Physical holders can wait. Leveraged traders cannot. Investors who use 20 times or 50 times leverage got liquidated at $75 or $80. They lost everything, not just their profits, their entire principal, plus they owe money to the platform. Move 2. Understand the February 15th window. COMEX settlement closes February 15th. Institutions are positioning now. If industrial demand holds, fundamentals haven't changed. Chinese dealers are refusing to sell. That creates supply pressure. Material suppliers can't lock in prices. This creates a temporary squeeze. What does this mean for you? Between now and February 15th, we're likely to see extreme volatility, sharp rebounds followed by sudden drops. This is institutional players positioning themselves. If you're going to make a move, whether that's buying more, selling out, or holding steady, you need to decide before that settlement window closes. Move 3. Position for the rebound or exit completely. Silver either recovers in 6 to 18 months or we're in a multi-year bear market. If you believe in fundamentals, dollar cost average over 4 to 6 weeks, no leverage, physical or unleveraged ETFs only. Don't go all in at $25 per gram. Buy small amounts. If it drops to 22, you buy more. If it bounces to 28, you buy less. This smooths out your entry point. If you don't believe anymore, exit now. Don't hold out of stubbornness. If you're finding this valuable, hit that like button and comment below whether you're holding, buying, or selling silver right now. Make sure you're subscribed because I'll be tracking this situation daily. Silver miners are considering production cuts. Price collapsed, but their costs didn't. If supply drops while demand holds, we get a violent rally. Here is exactly what I'm monitoring over the next 2 weeks. First, ETF flows. When institutions flow back in, that's your bottom signal. Right now, outflows are still happening. Second, physical premiums. If premiums rise while spot price is low, that means physical demand is strong. That's a disconnect between paper silver and physical silver. That's bullish. Third, the dollar index. Silver and gold are inversely correlated with the US dollar. Dollar weakens, Precious metals bounce. Dollar strengthens. More downside. Fourth, Fed commentary. Any signals from Kevin Walsh about rate policy will move this market. Hints at rate cuts. Silver bounces. Stay hawkish. More pain. Look, the people who are going to come out of this okay are the ones who bought physical silver with money they could afford to lose, who didn't panic sell at the bottom, and who understand that precious metals are a long-term hedge, not a get-rich-quick scheme. If you bought silver because you believe in the fundamentals, because you're concerned about currency debasement, because you want a store of value outside the traditional financial system, then this crash doesn't change your thesis. It's a buying opportunity. But if you bought silver because you saw it going up and you wanted to make a quick profit, then you need to seriously reconsider whether this asset class is right for you. You have until February 15th. Know your risk, watch the settlement, execute your plan, don't use leverage. The silver market just went through a historic shakeout. Retail investors panicked, institutions repositioned, and now we're in a critical 2-week window where the next major move is going to be established. Don't make emotional decisions. Don't chase price movements. Smash that like button. If this video helped you understand what's really happening, comment below with your strategy. Are you buying the dip, holding strong, or cutting losses? And subscribe, because I'll be covering every major development in the silver market as this situation unfolds. The next 2 weeks are critical. Make your move wisely. I'll see you in the next one.